Hello and welcome to the Savvy Money Show with me, your host Sean. If you find any information in today's video informative or helpful, please hit that like button. It helps get the video out to more people and helps with the YouTube algorithm. If you haven't subscribed, and why wouldn't you, please hit the subscribe button. Now we're going to do something a bit different. We're going to recap on a share I recommended last week, and then we're going to recommend some other shares. Well, I'm not recommending, sorry, because I'm not a financial advisor. What we're doing is we're going back on some shares that I bought into, and I told you the reason why. I do not recommend. I give you the good and the bad and let you make your mind up. Clovis Oncology. When it was $7 a share, I said how I was going into it because it has its FDA approval coming up. You can see here it's come up to $9.30 before correcting and closing at $9. Now, did the video at $7 a share. I assume you didn't get in at $7. Assume you got in at $7.30, maybe got out at $9.30. You might have got out at $9. So let's say if you're in that range, you've got 30% gain. Now, the FDA hasn't given any inkling of approval on it, and you have until Friday. If they deny it, it will drop back down again. So, my opinion, and it is just my opinion, I'm just some idiot on the internet, remember that, is what I have done is I've sold. Now, I sold at $9.30. Now, if it drops back down again, I may buy a small position, maybe a third of what I had originally, because I would have made that in profit anyway and made a little bit more. So I may buy less than what I made in profit, so it would be a risk-free investment before the FDA either approve or don't approve the share. But this is just to inform you, an update. There was 30% gains at least on this share when I notified you. Now, are you saying, but Sean, I need you to tell me what you do? No, you need, as I said before, you need to have a plan. Going in without a plan is not something I recommend when you're going into the stock market. I do not tell you what to do. I have a plan with every share, and you should have a plan as well. Now, this one, Duke Energy. Duke Energy, as you can see, was between 62 and 103, has a PE ratio of 16. Now, a dividend of 4. Now, tomorrow the earnings come out. It has always beat its earnings, so I expect it to beat its earnings now, especially during recession periods when people at home using more energy. Now, I will be picking up a small position in this, mainly because it has more liabilities than assets, but everyone in the energy market does. Now, it's increasing its income and its profit year on year, I just think it's worth a small position if you buy it today in advance for tomorrow. The earnings will come out. If it beats earnings, it may jump. If not, it's still a good company to hold, that you can hold for a long term. But as I said, it's only a small position. On to the next one. I was asked how to protect yourself against the stock market crash, and that would be shorting the market. I said this was dangerous. Betting against the Fed is a dangerous game, and because the Fed has a lot of tools in its box, a lot of powerful tools, and you've seen them being used, printing more money, stimulus bills, and when people thought there would be no more, it's bringing out more and more stimulus. But if it comes to the time where it says no more, and I think we're getting closer and closer to crash levels. I mean, you've got 17% unemployment. Real time unemployment is 24%. 30 million plus unemployed. You have, I think, the depression, the highest, was less than 5% more than it is at the moment. So now SPXS is, that's what 1.85% yield. Now it's been going up because the market has been going up. Now, that's, which you can see here, it's gone up when the market's gone up, and it's gone up when the market goes down, as you can see there, and then it goes down when the market goes up. Now, if you think the market is going to crash, that's how you short the market. Now, Vista has earnings. I'm going to start rushing through these because there's a lot to go through. You have Resi. Now, this is one that agreed a takeover at $12.93 a share in February, and then of course coronavirus hit. Still gives a good dividend, unless they'll probably cut that. But the thing is, when the company pulled out of taking over them, it wasn't all bad news, because they agreed to take over $55 million worth of shares and give a $20 million loan. Now, it's half the price, half the takeover price. Now, they thought it was, this other company thought it was a discount at $12.93, and it's, you know, it's, in the past 5 years it's broken $16 mark. I don't like going back 5 years when checking stocks, but it's just to give you a bit of clarification. I think this will be worth a buy as well, but please do your own due diligence, don't rely on me. Now, this is a company which has their earnings coming out again this week, on Wednesday I believe. Now, it's risen, you'll see, because Twilio went up 100% on their earnings. Problem is now is at 160. I would want it to be below, around about 150, maximum 155 before going in. This is a bit too high for me. It's at the highest part. 164 was the highest it's been. Now, you see it's gone up 10 points. I'm not going to go in at this price, even if it's a lost opportunity. I think because you can build your own website, with this. You've got the cloud part of its business. You've got a lot of the business, and people are looking into how to do this while they're off. I just think it will have good earnings, but I just think this price is a little overpriced. If it come down a bit, then I will go into it. Now, Cisco Systems, again, a company that has its earnings and good PE ratio and dividend. Again, we all know about Cisco. I think it will do well. Now, sorry for rushing through this and not doing in-depth pull. I'm trying to give you ones that you can do your own due diligence, because a few people have gone and bought without doing due diligence. So after Tilray, it's another one, discount. So if you can, if you look into that, it's hugely discounted from a $51 to $8 now. The other one I said, the last one that I was going to speak about is one I said before, and is MGM. I said how there's been a lot of insider buying now, and when sorry about that. I said there's a lot of insider buying, and when I done an in-depth report, it was between this and Las Vegas Sands. Las Vegas Sands was slightly better than MGM because of its balance sheet, but then Las Vegas Sands was less of a discount than MGM, and that's why I think there was insider buying on this. It has its reports coming out this week, so check that out as well. Anyway, as I said, sorry for the background noise. I do have kids around, and if you liked anything in the show, please hit the like button and a subscribe button. It really does help support the channel. If you're looking for a free trading app in which to buy the shares, there are free. There are links to 3 different apps down below. You have Freetrade that only needs £1 deposit, and you know, if only to get the free share is worth £1. You have Trading 212, and then you have Stake, which has over 3,500 US apps, US stocks on it. Now, I use all 3. I wouldn't recommend anything that I didn't use. And stay safe, stay investing, stay savvy.